Hey, Dan Passarelli here. I was thinking earlier today about uncertainty and volatility. And those two words, at least in the trading and investing world, I think have a lot more in common than even I originally thought. We've all seen those graphs or heard those numbers about how the S&P 500 and volatility have an inverse relationship. When the market goes up, volatility goes down. When volatility goes up, the market tends to go down. But it kind of works that way with uncertainty as well, doesn't it? Markets hate uncertainty. And when there's uncertainty, those markets tend to sell off. And then when that thing gets resolved, the market tends to rise. And what got me thinking about this is the upcoming presidential election. Very upcoming. Tomorrow, as a matter of fact. And I looked back, actually kind of cheated. I talked to my good friend ChatGPT. And since the 50s, the market rallied the week after a presidential election almost every time. I want to say there was only about 4 presidential elections that the market didn't rally the week after a presidential election. And so that ends up becoming pretty telling. The market's selling off a little bit here. Over the past 4 days, we've had some red candles. Still sort of in that neutral technical zone, staying above the 50-day moving average. But once we have the election and we have results, let's be real here, there's a likelihood that the results might not be wrapped up by Wednesday morning. Once all the dust settles, regardless of what happens, it's very likely that the market rallies. You go back and look at those figures, and it's Republicans or Democrats, it doesn't matter who gets elected. Once we get more certainty, that's when we tend to see the market rally. So I just kind of wanted to share that to give a little bit of insight and maybe to give you a little bit of edge in your trading this week and next. Hope that helps. This is Dan Passarelli, Trade Smart.